when I'm not where you are. It's this feeling in my heart, and it aches when we're apart. I can't stand to see the stars, knowing I'm not where you are, while you're playing in the dark. I am tired, so won't you come to bed soon? Wait in my bedroom, counting the hours till you get to me. Watched by the white moon, stuck in my bedroom, counting the hours till you get to me. I can't wait, I feel you getting closer. Count the minutes till I see you come on over. Overwhelmed, can't wait, I know you're getting closer. Count the minutes till I see you. Won't you come to bed soon? Wait in my bedroom, counting the hours till you get to me. Watched by the white moon, stuck in my bedroom, counting the hours till you get to me.
I can feel this tide choke my neck and I just wonder why I'm buried in a suit I'd never buy, a suit I'd never buy. Cufflinks on my wrist, I can't act surprised. When the shovels hit dirt in the earth, did they start to cry? Since I'm 17, I've been looking for a place to make me be complete. I've been looking all alone out there for anything to make me feel alive. Bring me back to life. Bring me back to life. Bring me back to life.
All right. I think we're live.
Are we?
I think so. T, are we good?
Yeah.
All right. Awesome. Hey, guys, let's just do a quick audio check. If you guys can see us clearly and hear us in the chat, if you would just throw a yes or a hell yes in the
Test.
the chat
test,
there.
Test.
Check, mic check.
Yes. Looks good. All right. T, we got that music pause too? Here, I got it.
Good
cool.
to go.
Okay.
All right. What's up, guys? Hope everybody's doing well. Welcome, welcome. This is one of our last shows of the longest year in human history, 2020.
The longest, shortest year.
Yeah, it's been wild, man. How you guys doing?
Good. Is 2021 gonna be like, you know, in the is it gonna be the Roaring '20s now?
I guess so.
Because in 1918,
Yep.
they had the Spanish flu, and then that kind of
And
kicked
then-
off the 1920s with the whole Roaring '20s. Of
Yeah.
course, then we had the Great Depression afterwards.
Yeah.
You know, it's going to go one way or the other. All I know is, you know, we're positioned well. I feel like the past week or two has been kind of profit-taking season for you guys.
Oh, yeah.
Right? Because you did a lot of work in the earlier part of the year, got into a lot of positions during the March panic, and then things are up really, really big right now. We'll cover all those. Bitcoin's actually kind of boring this week, which is good. I like boring Bitcoin.
It's consolidating at all-time highs, so that's usually
Yep.
a pretty good sign.
Yeah, you know, I mean, basically just kind of squeezing into that 20K level. And I know last week we talked about this where, you know, the breakout above 1,000, that all-time high, it was basically, it took about 100 or more days to break out, and we had 235% pullbacks. So I feel like a lot of people are aware of that, and I don't know. I'm just kind of waiting. And as you guys know, I mean, I don't get overly excited at every little move in the market. You know, I know people just love to overanalyze price and, oh, it's breaking down or it's breaking. Well, if you zoom out and you have perspective on the bigger areas, that's where things really start to make sense. But yeah, a lot to talk about this week.
I just want to start off by making everybody acknowledge my shirt. I had a custom-made shirt. I'll have Tony switch over to me so we can see it. But it says stonks embroidered in my shirt.
I love it.
So
When
yeah.
can I get a Stonks Only Go Up shirt?
You know what? I'm actually going to add men's merch to my shop.
Nice.
My She Talks Finance shop. So be on the lookout for that. I'll let everybody know when it's ready. We're going to get some like really funny sayings. Stonks only go up.
Yeah.
Money printer go burr.
What's funny is when you're walking around in
BTFE.
public, people are gonna be like, "Man, she can't spell." You know?
I know. They're totally. I actually posted it on my Instagram and I was like, I don't know how many people are really going to get this joke, but I'm going to do it anyways.
Yeah. Well, I think all of our followers will because they're
Yeah.
in the space. But
Anywho.
I'm gonna need mine in like 100-point font though. Yours is nice and modest up here.
They
I'm gonna
make
need
you-
mine like massive.
This
Stonks geek.
particular shirt, it has to be small, but we can definitely get some big ones going.
All right, I like that.
hey, Steve Nice just said, "Hey, Nikki, thanks for Stitch Fix."
Oh, that was him.
Hey-o.
Yeah,
was
that was actually
Travis.
Trav. I don't even know if you got in
I
that.
didn't even get in it because I was actually, I was a little bit unsure about the model,
Yeah.
about that whole model, and I wanted to test it, so I got some deliveries done.
Mm-hmm.
But by the time I like got my deliveries and kind of was able to test it out, the stock was already
Yeah.
flying.
How was the experience though when you actually got
So
close?
I love the experience.
Yeah.
I would say, and we have another lady in our community that was testing Stitch Fix as well, and we both kind of had the same experience where we didn't love the selections, and they didn't seem to get better. They seemed to get worse for us.
Interesting.
But I bought 2 things from every box, even though I didn't love 3 of the 5. I still bought something.
Well, that's probably the case, right? Like they know you're not going to convert on 100% of the products, but
Yeah.
2 or 3 on average, I bet, is maybe their goal.
I just think that there's, me personally, like I know my brands and that I want to go direct shop with those brands.
Yeah.
But I think the experience is really fun. The Stitch Fix experience is fun. And I think that there's always going to be a portion of the population that wants to shop that way with the subscription model coming to their home. They don't want to go out and go, to the mall.
Yeah.
So I think there's always going to be a demand for that or a need for that. So
Trav, what happened with this stock? It's up massive, and maybe we can give a little bit of context on what actually happened. So you dip bought this in March, right?
Yeah, $13 a share.
Hell yeah.
So interesting because on March 9th, they report. So this is a stock that I've followed pretty much since IPO. It's an interesting business, like Nikki said. They started as a subscription clothing business, but there's a huge opportunity for this company to become like the department store of the future online because they have opened up the ability now for their customers to actually buy things a la carte off their website, and they're like really focused on personalization and using data to like tailor clothing and fit to people that is much better than your average retailer. So the idea here is that this company can be very, very large if they execute on the opportunities in front of them over the next decade or two. So that's why I'd been following it. Also has a good CEO. interestingly enough, the stock has also been highly shorted pretty much since it started trading. And so at that March quarter time frame, and this was also kind of in the middle of when the market started selling off in March, they had a quarter that they reported that I thought the numbers actually looked quite good. They still were growing at almost 20% year over year. All the metrics looked pretty solid, but for some reason the stock got sold off like 40% after hours. So that's when I finally decided to make my entry at $13 a share in March. Alerted our community and at Scale Incubator. And I've pretty much just been holding it, kind of watching as they've reported more quarters and as the business has recovered through COVID. So they just reported another quarter last night.
So
And-
that's the reason for the gap up.
yeah. But the funny thing is, the numbers this quarter on most of the metrics they report was worse than the quarter they reported in March.
And that's the stock market environment we're in, folks.
Yeah.
The stock's up 40 plus % today on a quarter that I thought looked fine, but didn't look like amazing.
Exceptional.
They grew 10% year over year, which is actually a lower rate than they grew in March.
Still good for a retailer, though.
That is true. That is true. And there were some interesting signs, like they had really good sequential customer growth. So the amount of customers they gained from last quarter to this quarter was actually some of the highest numbers in their history. So that bodes well for future revenue growth, assuming that they can keep those customers. But, there really wasn't anything other than that was truly exceptional. It's just I think the stock is highly shorted. We're in a frothy market environment. And, you get a little bit of positive news, and this thing is now up. It's a net 300% gain for me. I did take some profits on it today at 52. I am still holding a runner.
Sick,
I
dude.
have to say,
Nice.
I'm so proud of your patience with this one.
Yeah.
You really just stuck it out and just held through. And
Yeah.
I have been one of my biggest challenges, as we know, has been selling things too early, selling my winners too early throughout my career over the past decade. And so I've been trying to, with your help and your help, get a little bit better at that.
Yeah.
And we've talked about
you
this.
nailed this one.
Yeah, I actually didn't take any profits on it until now, which is unusual for me, because usually I take profits once it's up 100 or 200%. But yeah, I'm learning, guys.
Hell yeah, man. I'm proud, brother. I'm proud. So, what's really interesting about this one in particular is the chart pattern. So I love these accumulation range breakout plays.
Yeah.
And we talked about this, I think a month or two ago, how it was breaching kind of that 30-35 zone and turning that from resistance, multi-year resistance, into support. And I was curious, I don't know the story of back here in September 18 when it had a breakout and then a gap down. Do you know what happened here?
September 18, so that was back in the fall 2018 sell-off. I can't remember what their quarter looked like back then. They did have a quarter that they reported, obviously, in November, so that may have been part of it as well. But I believe this first gap down was just based on the market reaction when the whole market sold off.
Okay, so that was just a market sell-off.
That was a market sell-off. This may have been related to some disappointing numbers, but I'll have to go back and look at that. Yeah, I don't recall.
Interesting. So either way, it basically made a new high today. And this chart pattern is actually a recurring theme that we've seen in the markets a lot this year.
Yeah.
Like Peloton.
Peloton looked just like that, except it actually ended up ripping.
Yeah. So it basically, you have a multi-month accumulation range. You break out, you retest it, and then Peloton has just been on a rip since then. Another one is what was it? Snowflake? Is Snow the ticker?
Yeah.
So this one recently broke out. Very similar idea. Accumulation range, breakout, retest, rip. Another
Upwork
one
might look kind of similar to that too.
Yeah,
And
Upwork,
PLTR.
Palantir. Here's another one. Palantir, accumulation range, and then breakout in November, and then just been ripping. Upwork, Nikki, I know this is one you've been in. Zooming out. So, yeah.
That one kind of did the same idea.
Basically a gap, and then it just ran. So, you're still holding this one?
We're both. Are you still holding Upwork?
Yeah, I've taken some profits on it, but I still have a position in it.
Nice. Yeah, I don't know. I find it really interesting that this is kind of just a very common chart amongst a lot of stocks this year.
It has definitely been the 2021 theme for many, many charts. And I guess it's going to be interesting going into 2021, speaking about that, to see if these charts, cool off a little bit or if they continue this momentum. There's just so much momentum out there right now.
Yeah.
That and this is, I know we kind of wanted to touch on this and how I guess the greatest lesson we've learned in 2020.
Yeah.
There's just so much momentum out there right now. Charts are thinking, they're trading off momentum first, valuation second.
Yeah, valuations don't matter anymore, right?
I mean, Snowflake is a perfect example. It's
Yeah.
absurd. It's trading over 100 times next year's revenues.
I
Trading
mean,
over
even
40.
Tesla is
Oh, yeah,
crazy.
I mean, Tesla's the
Yeah,
poster child.
it's Zoom. I mean, all of them. They're all nuts.
Yeah.
They're not trading on valuation. They're trading on momentum.
Yeah.
So is that theme going to continue into 2021 is the question.
Yeah, and I guess, I wanted to ask you guys also about Nordstrom, because this is one that you guys nailed also. Is this one out of like left field, or is this kind of reasonable where it's valued today?
I mean, in my video that I posted on it in October, I said I think this can be a $30 to $40 stock. I didn't expect it to happen in a month, but I think it's a reasonable place for it to be valued. I don't think that it's an unreasonable valuation where Nordstrom's at today.
Okay.
They do still. I mean, the business still does need to recover over the next few quarters, and they need to take care of some debt that is coming due in the next year. So those are some minor things that, could provide a little bit of headwind. But otherwise, assuming they take care of those things, I think, this valuation is perfectly reasonable.
Nice. Okay. Yeah, I mean, a lot of movers, a lot of momentum. Why don't we do that? Why don't we talk about our biggest lessons of 2020 around investing? Trav, why don't
Okay.
you kick us off?
I mean, the only lesson I seem to take away from this year is YOLO. No, I'm just kidding.
YOLO Tesla calls, man.
Yeah, no, I'm kidding. I mean, I think you've said it a couple of times. I think you even said it last week. The work we do in the depth of the bear markets or in the corrections, or even prior to that, when we're doing work on stocks that no one's paying attention to, that's when you set the groundwork for the later moves like Stitch Fix today, or like any of the ones that we've had like Nordstrom or the Bitcoin breakouts. You do that work well ahead of time, and that's what sets the foundation for you to make the gains when it happens. So sticking to the process, I think that just reinforced this year, and it's reinforced by the fact that not necessarily by the fact that we're getting stocks that are up 50% in a couple of weeks, but more by the fact that we bought in March when things looked scary because we knew that there was a high probability this was going to be a good buying opportunity on some of the companies that were getting to really crazy valuations.
Yep.
And it just validates the approach that you have to really truly be willing to step in when you don't have all the information, when things do look uncertain.
Yeah.
Yeah, it's so funny because, I feel like 2020 has solidified that my strategy, I'm approaching it the right way, and I feel good about that going forward. And also understanding that, like you said, the groundwork is being laid in the times where things may not look so peachy.
Yeah.
And maybe stocks aren't going 100% in 2 weeks, but stick to the process, stay patient, and have a plan as well.
Yeah.
Because if Travis and I would have gotten impatient last year, we would have cut out of positions way too early and not been able to see and realize some of the gains that we've seen this year.
Yeah.
The other thing about 2020 that I've thought about a lot, and I've had to kind of pull myself back, it's been so hypey, it feels like, I don't want to say this, but how do I say this? It feels like sometimes you're printing money when you're looking at some of these stocks and they just keep going up and they keep going up, and you feel like you're on top of the world and you feel like you can't lose.
Yeah.
And my biggest lesson for 2020 is always going back to humbleness, like always pulling back and looking and saying, this is an outlier year. We don't see years with 30 to 50% panics in the market often.
Yeah.
But now that, and 2008 for you, the end of 2018 for us, now this year, 2020, seeing the panics, they don't come often, but it solidifies that our process is working.
Yeah.
And that when those panics do come, that's the time to freaking attack. And so I would say for me, it's just staying humble, understanding that this is an outlier year for momentum, for stocks, for everything. And we were able to pick up those multi-baggers in March because of this huge panic that we saw.
Yeah, it's so true. I always think about the fact that as a trader or an investor, you can make a lifetime's worth of profit in 1 year.
Yes.
You know, and we see so much bullshit on YouTube and so much hype around like day trading and getting rich in the markets. And I get it. There's a lot of millennials and Gen Zs that are coming into the market for the first time and they're seeing, you know, all these memes and Wall Street bets and whatever. And everybody has to come in and learn some hard lessons. But one lesson that I just really like to hammer is don't think that you're going to be profitable every day, week, month, or year. But just know that if you have patience and you play the long game and you develop a strategy and you're patient, that you can put yourself in a position where you do something that makes you look lucky to everybody else. Right? It's like in the depths of all the bear markets since 2013, buying Bitcoin when everybody was calling us crazy, now those same people call us lucky, right? It's the same thing with stocks with you guys. Some people probably look back and go, oh yeah, you guys got lucky buying in March. No, we were on the show and we were doing surveys and nobody was bullish except you guys, right?
We dove into the data. We were looking at historical, you know, corrections in the market and sell-offs and comparing PE ratios, and like we were doing all kinds of things back then. We weren't jumping in blindly.
I made some big portfolio shifts too. Like I wasn't necessarily bullish per se. I was trying to get entries on companies that I wanted for the long term, and I actually didn't expect that 2020 was going to end up this bullish and this strong. I made a big portfolio shift where I actually sold out of some companies whose balance sheets I thought may not be strong enough to weather the crisis. Turned out they were all probably fine. I should have just held on to almost everything. But but what it did allow me to do is free up capital to put into great companies like Square and Facebook that have net cash on their balance sheets that can grow for 10 years, you know, or Stitch Fix, or you know, there's a number of others. OMAB is another one that recently, you know, instead of buying airlines, I decided to shift into airports, which I think is a better business. You know, so we made those decisions which are fundamentally driven. It seems to have worked out. It also seems that almost everything's worked out this year. So you do have to be a little bit careful, like you said, like if you're a newer investor too, like this game will get hard again. It definitely will get hard. You know, maybe for 6 more months, we're going to be in a frothy market environment and it's going to be like everything's still going up, stocks going up every day. But there will come a time when things get harder. And that's when it will reveal who has the right process and who doesn't.
And I know we have a lot of newer people coming into the markets this year in 2020. Maybe some of our viewers are brand new to the markets. And it's just, sometimes though, people have to experience it for themselves. Like you may feel invincible and like this is what it's going to feel like all the time. And you can tell them till you're blue in the face that, you know, this may not be every single year. It may not look like this, but until they experience it for themselves, they have to pay their tuition.
100%. Yep. Yeah, good stuff, guys. Well, let's run through. I know we've got a lot of news, a lot of things that have been popping off over the last week or two. Last week, we really didn't get to cover news because we were talking about the market so much. One thing that I find really interesting, and Trav, I think you have an opinion on this. So MicroStrategy, who is the publicly traded company that bought, I think, $400 or $500 million worth of Bitcoin, a month or two ago, they are now proposing an offering of some notes to buy another $400 million worth of Bitcoin. So I know there's opinions on this on very extreme ends of the spectrum, but Trav, I wanted to ask you, just coming from the public markets and somebody who, you know, you've talked to so many CEOs and leadership teams of publicly traded companies. What would you, if you knew nothing of Bitcoin and you saw this, what would you think?
I think this is a very unusual and risky proposition. A publicly traded company that has a different core business. I mean, MicroStrategy's core business is to do BI and visualization software. That's what they've been doing for the past 20 years. They've actually kind of lost ground in terms of market share. They should really be focused on that. But I guess I didn't. First of all, I'm a Bitcoin bull, so I think we talked about that plenty last week. So it's not like I'm against Bitcoin. But taking on excess risk on the balance sheet, taking out debt to buy Bitcoin when that's not even your core business is a little bit risky and strange in my opinion, and sort of like indicative of where we are in the markets right now. I didn't really have a major problem when they wanted to use the excess cash that was sitting on their balance sheet and to invest in Bitcoin. That's fine. Make that bet. It's still a risky bet, but whatever. That's your balance sheet has net cash. That's fine. But actually taking on debt that has the potential to create, you know, a significant existential liability for the company down the road should this bet not pay off is kind of eye-popping, and frankly, most CFOs at a multi-billion-dollar public company would not be allowed to do this.
Yeah.
Luckily, Michael controls enough votes to control the board, and so he can do this. But it's a really unusual move.
Do we know what interest rate they're going to be paying?
So
the bondholders?
I haven't looked, but convertible notes usually carry a pretty low interest
Usually,
rate
right?
if you don't have a levered balance sheet. So I will say this probably doesn't come at a super high annual interest rate for them, I would guess, but it has the potential for dilution to the stock because it is a convertible. And it is a liability that will come due in a few years because the convertibles, the principal amount will have to get paid off in 4 or 5 years.
Yeah. Yeah. You know, for me, I understood the idea of taking the excess cash because they are such a cash flush business and, you know, low overhead and whatnot. And I got that. But yeah, to issue debt, I'm like, is that kind of like, you know, your average person like taking a mortgage out to buy Bitcoin? Like
Taking on margin.
Yeah.
It's pretty much, right? I mean,
And I mean, everybody pretty much knows, like, we're all bullish on Bitcoin. We all own it. We trade it, but we want to be responsible about it. And I think, you know, that's why we always say, like, don't take out debt to buy Bitcoin, because if you do that and it goes down, you're more likely to panic sell. And everybody is in the camp of, oh, I'll never panic sell. Yeah, well, everybody says that and nobody does the smart thing, right? So I don't know. It is strange. I love the conviction.
Yeah.
I love
it's
people
a huge
coming in.
bet
And,
for them on Bitcoin.
yeah.
Cojones.
I love
Right?
people that, you know, they get skin in the game. There's a lot of people that have opinions and they just talk shit, and then they don't have any skin in the game. It's like, okay, if you're bearish on Bitcoin, then short it. Oh no, and then they shut up, right? Or if you're bullish on it, put a significant portion of your wealth in it. But there is kind of a level that you get to where it's like, is that really responsible? I don't know.
Risk management is still important.
Yeah.
Even if you think an asset is going to go up and it's going to moon, you still have to manage risk because, I mean, especially with something as volatile as Bitcoin, right? But hell, I mean,
You know,
good luck to the bondholders.
Yeah, I mean, MicroStrategy in the last 12 months generated around 40 million of cash flow from operations, around 30 to 35 million of free cash flow. So this isn't insignificant relative to cash flow. You know, this business is profitable currently, and they, you know, hopefully can pay this down, or hopefully the Bitcoin gains can take care of this. But there are scenarios out there where this debt actually becomes a problem for the company a few years down the road if things don't go well with this bet. So.
Yeah, well, look, if Michael hears this, you know, kudos for having big cojones. And, you know, I just, again, I respect people that put their capital where their beliefs are. And I don't know, I just hope it works out and it doesn't cause problems for the company, like you said.
I guess we're going from debt-fueled buybacks, which everyone was up in arms about forever, to debt-fueled Bitcoin buying.
That's true. That's an interesting way to look at it.
Yeah.
I mean, people hated debt-fueled buybacks.
Yeah.
But I don't know. Well, it'll be interesting to see how the market responds to that.
Yeah.
I think, and the stock has been pretty correlated to Bitcoin over the last few months, and this will only serve to increase that correlation.
Yeah.
So could be interesting to watch.
Awesome. All right, next up, we got China doing another airdrop of their digital fake cryptocurrency. I always have to preface that. I will never call a central bank digital currency a cryptocurrency. We always have to put the word fake in front of it because it is no different than OneCoin or BitConnect or any of the other Ponzi bullshit coins. we have to make that clear. But anyway, China's doing another airdrop worth about $3 million, I believe. And I think the first one they did, it was much smaller in size and there wasn't really a lot of traction, but they're definitely pushing forward. And the U.S. and basically every central bank now is going, okay, we need to get on this digital currency game. So it's, you know, just case in point, what we've been talking about for several months, this arms race is definitely heating
It's
up.
happening.
Yep.
It's a pretty small amount overall, but interesting that they're doing another round of it. They're just kind of like starting to like trickle it out there.
Yep. It's like the drug dealer, right? They're giving out little free baggies of whatever your choice of drug is and getting people hooked on it. That's what it feels like.
Yeah. Yep. That's right.
Yeah. Cool. Also, COVID, we just had the first vaccine jab outside of the trials.
Mm-hmm.
I
saw a video of it actually, or a video of one of the early ones in the UK.
Yeah.
UK got the Pfizer vaccine approved last week. US is thought to approve it at the end of this week. We'll see.
It sounds like it'll probably be approved.
Yeah.
Yeah.
Yeah, I mean, with that news, I know some airline stocks were making some pretty aggressive bounce backs. American Airlines was up pretty big over the past couple of days. Have you guys gone into any travel stocks yet, or are you guys still sitting on the sidelines?
You know, I'm still sitting on the sidelines with the airlines. I just couldn't get myself to buy. But on a pullback from here, maybe I could be interested. I played it through Travis's suggestion, which was TripAdvisor. So that I felt
LTPRA.
So we had
We did Liberty Trip.
TRIP,
Yep.
and Liberty TripAdvisor, which is a derivative play on TripAdvisor. So we
Where were you guys buying TripAdvisor?
around 20, and then I think a little sub
Down here?
below that, like 18, between 18 and 20 in the spring.
Nice. And okay, so that was like the core kind of rebound trade.
Yeah, I kind of like that better because if you think about TripAdvisor, they can kind of still function with domestic travel.
Yeah.
You know, people just traveling within their countries, trying other cities or other restaurants or whatever, or hotels. So it felt to me like it was a safer play than the airlines.
They had net cash on their balance sheet going into the crisis as well. So in terms of business model, just a much safer play than airlines, which have a lot of operational and financial leverage, most of them.
Gotcha.
So that was the thinking there.
Yeah.
Also, TripAdvisor stock was already down a lot prior to the crisis. So it was kind of getting to levels that looked a little bit undervalued relative to its current profits. They also have the experience business that they've been building over the last couple of years. Basically, TripAdvisor and Airbnb both control they have the two largest market shares in booking experiences. So you go on a trip, you know, and you want to book not just hotel or a home to stay in, but you also want to, you know, book a cooking class or a kayaking trip or whatever it may be. And TripAdvisor is one of the big players along with Airbnb in that market now. And that's a big growth market, I think, over the next 10 years as people seek out more and more travel experiences.
Yeah. Talking about travel experiences, Airbnb is going public, what, Thursday? Is that right?
Yes, they're going to price this week and start trading. They've already raised their pricing range up to, I believe now, $35 to $40 billion indicated valuation from like around $30 billion prior.
Oh, nice.
So it's going to come out. I was hoping to get it sub $30 billion, but it may not have an opportunity to do that. So
Are you thinking a trade off of the IPO, or are you going to wait it out?
if it comes out at that, you know, 35, 40 plus $billion valuation, which it likely will in this type of market environment, I'll
Yeah.
probably wait it out.
Yeah.
But you know, there's a lot of things to admire about the Airbnb business. There's also some things that are a little bit, you know, concerning in terms of the margin profile of the business compared, especially with Booking or even Expedia. Their margins have a long way to go to get to parity in terms of profitability. So they've got a lot of work to do still in that business to make it a great business.
Yeah. Isn't it annoying in a bull market when you get new listings and they just list so damn high?
Yeah.
Like we have that in crypto too right now. Like there was a project Polkadot,
yeah.
ticker was DOT. And I'm like, when it hit the exchanges, I think it was either a $4 or a $6 billion valuation. And I'm like, really? So I don't know. I've just been watching this. We came up with some ideas, and you know, it's got $6 resistance. It's got $3 support. I would really prefer to see like a, you know, just a washout and just wipe out all those early investors. Everybody will panic sell. That's when I really like to trade new listings. And I guess that's like a core strategy that you guys look at is like busted IPOs.
Yeah.
Yeah.
We've had some incredible investments over the last few years on busted IPOs. However, the market seems to have either figured that out, or they're just they're chasing IPOs, almost all IPOs now, and sending them up. So we are having fewer and fewer opportunities to find busted IPOs.
Yeah, even what was it, Corsair, CRSR?
CRSR.
Yeah, Corsair.
This was one that just basically the day after the listing was the bottom, and then just ripped.
Yep. People forget also there's been some amazing companies over the last few years that were busted IPOs. Square, Etsy. Even Facebook you can consider was a busted IPO initially.
Yeah.
So
Twitter.
Upwork, which is a recent one that we've owned that I've did a video on Upwork. I talked about Upwork as well as Stitch Fix on the video with Rob Koifman from Koifin on YouTube. And I think when we talked about it, you know, it was a stock that was on really no one's radar.
Yeah.
And of course now it's become a bit of a momentum darling along with some of these others.
Yeah, talking about Square, and the pattern that we've seen, I mean, it was the same thing. Accumulation range after the IPO, gapped up, pulled back, and then just ripped. And I know you guys were getting in early. Nikki, you were in at what, $9?
$9.
That's awesome.
9.11 to be exact.
Hell yeah.
Yeah.
20 bagger.
Yeah.
Sweet.
It's been a fun run.
Yeah.
Awesome. And that's kind of a good segue into, I just, we've talked about this, and Trav, you've talked about this at length, about how smaller investors have the ability to make more alpha, right? Like there's a problem of size. Like once you get to like $1 billion plus as a fund, it's harder to get alpha, right? And I just thought this was kind of interesting, showing the data, smaller hedge funds are outperforming larger hedge funds. And I've even noticed in a couple of the bigger funds I'm in, like on the managed future side, they've been underperforming, and they're in the 1 billion plus category. I don't know. What do you make of this?
Yeah, I mean, there's a bunch of academic studies that show as a investment firm grows in size, typically their returns go lower because they just have fewer and fewer places where they can invest capital, especially places where there's not as many investors looking. Even Warren Buffett, greatest investor of all time,
Yeah.
his returns have compressed over time. He still has put up pretty good returns in the last few years, but it's not anywhere near the alpha that he was generating 20, 30 years ago.
Didn't he say something like, if I had $1 million today, I could compound
double
at 50% a year or something?
Yeah.
And I believe him, honestly, but it's just an unfortunate reality. And there's like a perfect example was I was looking at a Japanese stock. There was a pretty good write-up on an interesting Japanese company, and my old hedge fund, I sent them the write-up. I thought, hey, this is something you might be interested in because they do a lot of work on Japanese stocks, and this one in particular actually was in an industry that they follow closely. And then they were like, oh, thanks, this looks interesting. And then they emailed me back half an hour later and said, actually, it doesn't trade enough volume. It's too small for us.
Yeah.
Because now they're at, $1.5 billion, $2 billion of capital. And so it's like, they can't even spend time and look at that and potentially even make that investment.
Yeah.
It's just out of the possibility.
That's the beautiful thing about being small investors like us. It's like if you're managing less than $50 or $100 million, like you do have opportunities that the big guys don't.
Yeah.
Yep.
And you can take more aggressive bets like on Bitcoin. We've talked about this at length, but funds haven't been in Bitcoin until this year, really. Like we've gotten all that extraordinary growth as retail investors.
That's right. So yeah, and as we think about 2021, I know this is the show. Part of the show today is about how we're positioning into 2021, but going to places where not all the big funds are already at, or places where some of the momentum parts of the market are ignoring. I think that's going to be a big focus for us, and especially in stocks in 2021, is trying to look in places where not a lot of people are looking, and that honestly is probably going to be some places that are a little bit more illiquid, maybe small caps. Other foreign countries, foreign stocks, places like that.
Yep. I know just in general, the emerging market chart is looking really bullish right now. So I think it's, what's the ticker? EEM. So I'll pull out and look at like a monthly chart, and you can see, this thing just looks primed to rip. I've seen a couple other charts on Twitter that was also pointing this out. I know we have part of our passive portfolio that's allocated to emerging markets. I don't know. Is there any piece of this pie that you think is interesting?
Definitely. Oh, absolutely. The weird thing with some of the emerging market ETFs is if you actually go in and look at their holdings, I've been pretty unimpressed with some of the holdings in these emerging market ETFs. They actually hold really poor, I shouldn't say low quality business. On average, some of the businesses they hold as their largest positions are either mega caps already in those emerging markets,
like oil companies and
oil
stuff
companies,
like that.
big industrials, banks, that kind of stuff. Stuff that's like
China.
Yeah, or
some big companies in China.
Yep.
So you want to go ex-China for some of them if you really want to truly get an emerging market fund.
Yeah.
Great point. Yeah, China can dominate some of these emerging market funds in terms of its exposure. So if you want to go get exposure to Vietnam, you're probably better off trying to do that directly, or finding a Vietnam specific ETF, for instance, rather than trying to get exposure through a broad emerging market ETF. So that's one thing I would say is like some of these you have to really dig in and see what are they actually holding. What am I really getting exposure to?
Yeah, there's an ETF. I don't know. Is this? No, this is the Nifty 50 index, but there's an ETF that basically gave you exposure to India, because I know India is kind of hard to invest in, and that thing's just been a monster. I think the management fee is like 50 basis points or something, so it's not super expensive, but it's not cheap.
Yep.
But you know, if we can find the next India, you know, that's going to have rapid growth, because you know, I'm obviously bullish on the U.S., but it's expensive right now.
Yeah.
Right. So I'm also thinking, like, where is the alpha? Where are the things that nobody's thinking about?
Well, I think other parts of Southeast Asia outside of China are still very interesting. So places like Vietnam, places like Myanmar, places like even, you know, Thailand and other countries in Southeast Asia are still interesting.
Indonesia,
yes. South America is still pretty interesting and fertile
I think
hunting
South
grounds.
America is interesting.
Yeah. Oh, yeah.
I definitely think that's a place to look for some opportunity.
Like Brazil, or what are you guys thinking?
Yeah, Brazil or Argentina. Argentina's tough because of the governance there, but there may be some opportunities there.
Argentina's like your drunk uncle that just can't get his finances together.
Yeah, exactly. Yeah, Argentina's really tough. Mexico,
Yeah.
though, that's not South America. That's
Central.
Yeah.
But yeah,
north or central, depending on how you define it. But yeah, I think those are definitely interesting hunting grounds. But even some developed markets that haven't historically been focused on by U.S. investors, like Japan. Japan's
coming back.
Yeah, they have another 900 billion U.S. dollar, which is, you know, several trillion dollars of yen, stimulus that they have just announced again this week. So the Japanese are very focused on making sure that they can dig themselves out of the deflationary environment they've been in for a decade or two.
Maybe one of these days they'll get back to all-time highs. So if anybody that doesn't know, like, the history of Japan, back in the 80s and early 90s, they basically had a bubble, and then their stock market has failed to make a new high since then.
Yeah.
The chart's actually looking like it's rebounding. It's breaking out of multi-decade resistance here. I don't know, Trav, what do you think? Are they going to make a rip for all-time highs? Or?
It's super interesting, right? Valuations are still pretty reasonable on a lot of stocks there. You have Warren Buffett, who bought, you know, 5 major Japanese large caps recently. So there's definitely some opportunity, I think, here. Plus, you got the stimulus, you know, that can help the actual consumer spending. I think there's a pretty good setup here. I think they can make another all-time high. I just don't know what time frame. But the hard part about Japanese stocks is that most of them don't file English filings unless it's a large cap like Toyota or something. So it can be tricky for, you know, English-speaking investors to go to Japan and figure out what's going on.
That would actually be a good service. Like, if a company basically did not just translations, but if they distilled it down and came up with some research reports for Japan. I don't know. Business idea, people.
Absolutely.
Yeah. Anybody that speaks Japanese. There's actually a question that we got that I thought was pretty good for the crypto space. So, you know, talking about finding like underpriced opportunity and, you know, where the alpha is going to be. So Mark R sent this in. He said, which scenario do you think has a higher probability for the next crypto bull market? Number one, capital will basically go to Bitcoin first and then go to altcoins and then back. And then that means Bitcoin will not abruptly lose its dominance in the market. So basically Bitcoin goes up, then altcoins go up, but Bitcoin stays the dominant force. Or number two, in the wake of the bull market hype, capital will become more interested in altcoins and the possibility of moon profit from it. And because of this, Bitcoin could lose much of its market dominance. So basically, is new capital going to chase the smaller projects and drive them to a higher market cap than Bitcoin? I think it's probably the former. I think that Bitcoin is the Mac Daddy and it's going to maintain that status unless something unforeseen happens, right? I can change that opinion tomorrow based on if something comes out. I don't see anything that I have high conviction in that's going to overtake Bitcoin. Ethereum, you know, I know, again, in the crypto space, it's very controversial. You got the Bitcoin maximalists. You got, you know, people that like competition. I seem to be more on the competition side. I'm bullish on Ethereum, cautiously bullish. But I don't think Bitcoin gets dethroned. One thing that I am bullish on in 2021 is some of the DeFi projects that actually survive this first wave. You know, the first wave in crypto, just like we saw with ICOs, most of that's going to fail. Most of it's bullshit. It goes away. But just like after the tech bubble in stocks in 2000, Amazon came out of that. Some big companies came out of that. I think we're going to see something similar in crypto. to where there are going to be projects that survive, and maybe one or two of the decentralized platforms or the automated market makers actually survives long term once they figure out a lot of the like admin key risk and all the stuff we've been talking about. But yeah, I mean, to answer this question directly, I think Bitcoin maintains its dominance, but I do think that the capital is going to continue to flow like it has been, which is step one, Bitcoin comes into Bitcoin. Step two, when after Bitcoin's price goes up and it pulls back, some people sell into altcoins. And then you get that, what Rocky, aka Crypto Hustle, calls the popcorn effect, where some of those start popping off. And then that leads to an altcoin season where then you get all the rookies that chase, and that drives prices parabolic, and then you get the crash, right? It's happened over and over and over. It's like, talking about printing money, like Jesus, man, it doesn't get any better than that.
Predictable cycles.
I mean, in the market environment we're in, I can definitely see some alts popping off in the next few months and making pretty eye-popping gains. On the other hand, like you said, like Bitcoin, we have this wave of institutional money that we've been talking about over the last couple of months that's coming into Bitcoin that is a pretty solid like rising tide. So it would surprise me to see Bitcoin really, really suffer in relation to, alts on average, but there's definitely gonna be some alts if we stay in this frothy market environment that pop off. Like, seems pretty clear, that popcorn effect.
Yeah, and it's real similar. Like if you look at Bitcoin as like the Apple, like the Mac Daddy or whatever, and then you've got these smaller caps. In general, smaller caps can actually go up bigger percentage moves than Bitcoin. Like you can get 1,000% runs, right? You got to be careful though that you don't trade the illiquid stuff, and that you don't chase like coins that are being manipulated through pump and dumps and stuff like that. But yeah, I mean, if you're a smaller trader and investor and you're looking for that kind of rapid growth opportunity, you can find that in altcoins, but it does come with more risk too. And the more you trade, the more you have opportunity to screw things up. So trade less, profit more, stop day trading. I actually just retweeted another article that came out talking about how, most day traders lose, and it doesn't matter how many times we talk about this, new people are going to come in and they're going to try that day trading route, and they're going to get their lunch taken.
It's the dangling carrot. It's like people want to they want to go for it. They want to chase it.
There was a big lawsuit out this week. Actually, there's a company that advertises pretty heavily on, I guess, YouTube and different social media platforms that, they're going to teach you how to trade and become a trader and make X amount per day. Turns out their trading results were actually very poor. There's like $150 million lawsuit against this company, I guess Raging Bull, we'll just go ahead and name it. Again, I don't know, all of the allegations, innocent until proven guilty or whatever, but seems pretty clear, if the SEC in this type of market environment where they've let a lot of things go, if they're going to go after somebody, it's probably a pretty high likelihood you did something wrong. So you got to be careful out there. There's a lot of people trying to take your money, especially in this type of market environment. Yeah, and just stay away from the hype. If something sounds too good to be true, it probably is. Trading is hard. Most people lose, but if you're patient and you increase your hold time, that's where the probability of success goes up, right? So, awesome. All right, next question. We've got a question from Dumble Doge. I guess I'm saying that right. Double Doge, yeah. What role does time play in technical analysis? For example, an extended consolidation range. Does it ever strengthen or reverse your position/theory?
Good question.
That is a good question. Nikki, I'll kick that one to you since you're the TA brains.
Yeah, I love some TA. Okay, so yes, for an example, an extended consolidation range, does it ever strengthen or reverse your position or theory? Yes, absolutely. So I'd say for example, right now with Bitcoin, right? Bitcoin is consolidating at all-time highs. So like when I look at that, I'm like, okay, it has enough strength right now to be able to consolidate at all-time highs, which is usually a bullish sign. The longer it stays consolidating at all-time highs, that plays a role into, okay, something's going to happen. The longer it can't break out at all-time highs, the more I'm going to be thinking, okay, I need to watch out for a break of this consolidation to the downside now, because it's kind of like you get to a point where like, okay, something's going to happen. Like it's squeezing and squeezing, and it can only consolidate for so long. So the longer that time frame goes on, the more I'm like, okay, we're probably going to get a more explosive move in either direction.
Yeah.
The longer that consolidation period has gone on for.
Yeah.
So yeah, I would say time definitely plays a role in how I'm reading the price action.
Yeah.
How long patterns have been going on for.
I agree. And like for me, I love boring Bitcoin price action because that usually means it's coiling up for another pop. Right. When things get overheated, like we saw last summer, and it went from 3K to 12 or 14K, and it got overextended, right? That's when things need to cool off. But we've basically had a year of consolidation with the panic to wipe out all the weak hands. That creates kind of this soup of just explosive opportunity, right? And that's why I tweeted a few weeks ago, like Bitcoin feels like a rubber band because you had that time where it could coil up and build that momentum.
Yep.
And it was around 10K for, I don't know, let's just pull up the chart here. You know, when it was hanging around 10K for quite a while, let's go down to a daily. You know, you can see, I mean, it was really here from, you know, the end of July until like late October. So that gave us that coiling up and that compression that we needed to make this next leg up. And now that we've made the leg from 12K to 20K, that's why I'm like, yeah, it's great. If we can hang out here for a month, 2, 3 or more, like that's great. What isn't great is if it gets up here and then it just collapses off of the high, then you know that was like a parabolic move. But in this case, I give the probability right now to the upside. Like I'm not selling, I'm holding. So what about you, Tribe? Do you think about like time in your, obviously like when you're trading options, like you put that in there, but how do you think about time and analysis?
Yeah, so usually with time, like when time as a fundamentals based approach, you know, time can actually change the risk reward a lot. Like if you consolidate and the company is still growing, then the risk reward actually gets a lot better with time.
Yeah.
And can provide like almost similarly, as you said, like almost like a coiling effect where you have like a pin-up pressure behind it for the potential for it to go up, or the potential for like a catalyst, like some acquirer to come in and say like, you know, this company's too undervalued, like we want to make a bid for it, or maybe it'll be a buyback. Like here's an example, Dropbox is a great example, one of my larger positions now. I've talked about it before, but it's a stock that really hasn't gone anywhere.
Popped today.
Yeah, in the past, but it hasn't really, in fact, it's actually I think down from where it IPO'd. And it's been in this $20 to $30 range, and really mostly in the low 20s for the past year and a half. But during this time, the company's actually continuing to grow its revenues, continuing to actually improve its profit margins and its overall cash flow generation. It has more cash on the balance sheet than it did. So the risk reward setup now is actually better than it was a year ago, even though it's at the same price. So the risk reward's gotten better. I think that potentially you started to see catalysts as well. Like I mentioned, like you've got an accelerated buyback now from the company. You had the CEO buy stock in late 2019. So these things happen and they create almost like this coiling effect where the
pressure builds.
The pressure builds on whether that means strategic alternatives from the company itself or from outside potential acquirers or those types of things. And so I actually like when this happens and can provide some really amazing potential gain opportunities in the future. So
yeah, it's got to be frustrating as a fundamental guy where you like find the story and then you're like, oh, this is a good investment. And then you have to like almost wait for everybody else to wake up to it, right? It's kind of like you find it, you have conviction in it, you see the vision, and then like how long does it take for Wall Street to pick up on it, right? And sometimes you can be wrong for like a long time, right? Because I think back here, what was this? This was like early 2019. I think you were buying right here, right?
Yeah, I started buying in the low 20s, and then I bought again in the mid-teens a couple of times. I recently...
This year you bought through here?
Yeah, I recently increased my position as well. So I've had 3 or 4 trade alerts on it in our community. I think my average cost now is around $18-19. But my first buys were in that low 20s range, in around 23, 24, I think. So, but the valuation multiple has compressed even further as the company's grown and the share price has not reacted. So it's become a pretty interesting setup overall. And
so it gets more juicy over time.
It can, yeah.
We've seen this movie, you know, with these stocks that looked like they were being left for dead, that were performing, and it took a while, but when it comes, it goes fast.
Yeah.
It can happen really fast. There are such things as value traps. So from the fundamental side too, sometimes there's information to be gleaned as well from a stock that's trading flat or even kind of slowly grinding down as the valuation multiple compresses. You know, if the business itself is deteriorating in some fundamental way, that is worth paying attention to as well, because like not every sideways chart eventually goes up. Sometimes that sideways chart ends up in a really bad loss position. Like people who were invested in Wells Fargo, for instance, they thought the stock looked cheap at $40, $50. You know, today it's a $28 stock, I believe, or $29 stock. So it hasn't gone anywhere for a couple years and has been a value trap, at least so far.
Short the bankers, bro.
But, you know, fundamentally, like there's things like the lower interest rates and interest spreads contracting. The Wells Fargo also had some regulatory slaps that it got. So like
Now it's got a digital dollar coming after it.
Yeah. I mean, I don't really see a bull case for banks long term. Like it feels to me like it's just like all their profit centers are getting sucked out.
Yep.
And then like, you know, with Bitcoin and then central bank digital currencies, it's like, do they really have a place in the world anymore? I don't know.
To be seen. It's going to be interesting.
It's like you said, like they're getting eaten up on from different parts of the market. You know, you've got a lot of new fintech companies, payment companies that are moving into their space, non-traditional lenders taking shares of some of their markets.
Yeah.
It hasn't been a great backdrop. Now, I will say you do have pretty low valuations now in a lot of major banks worldwide. You could also make the case that the largest of the banks actually consolidate power and some of the smaller and medium-sized banks go away over time. And these large brands can actually consolidate some power. So I don't know, I think there's smart arguments on both sides. I haven't been heavy in financials yet, at least. So it's an area I always poke around a little bit. I do have one bank position I've had this year that was just too cheap to ignore, and it's been a nice one. But
which one was that?
ING.
Oh, okay.
This was another crisis buy. It just traded down to 0.3 times book.
What's the ticker?
ING.
Oh, okay.
Yeah.
Oh, I had that right. Okay.
It trades. It's a bank out of the Netherlands, and you know it has really strong capital ratios. But the thing traded down to 0.3 times book, and it's like, this is too cheap for a strong banking franchise in a major developed country, and the stock doubled. I mean, it was like the thesis was so simple, but it was like, I don't see how I lose money here.
It's like at that price, you just buy it.
Yeah, you just buy it. You put a little in there and see how it goes. You know, they were paying a big dividend prior to the crisis, and I believe that they will again be able to pay a dividend in 2021 or 2022. So your dividend yield, your forward potential dividend yield is very high, or was very high. So it was like, hey, you know,
yeah,
YOLO.
Cool, man. Well, next up, we got Travis's favorite stock, Tesla. It's gonna hit the S&P 500. I don't know. What did you guys want to talk about this?
Well, it's funny because I was reading an article, and I think you have thoughts on opposite sides of the spectrum. I've seen people that think that Tesla still has a far way to go, and the stock's going to keep going, and they're going to see $1 trillion valuation. And then you see people that are like, this is ridiculous, and they need to be priced like a utility company or like a car company, you know?
Yeah.
And so there's just opposite sides of the spectrum. But I was reading this article, and I want to quote this.
This one from Wall Street Journal, or?
I think that's the one, yeah.
Okay.
I just had a few quotes to pull out, and maybe it can bring a discussion to the table. But so essentially, if I'm sure everybody's heard, the S&P 500 is including Tesla into the index, and it's going to be, I think, the largest addition that I think the index has ever seen. But someone can correct me if I'm wrong. And this is the quote. So, the people who will pay the price if the S&P screws up are the investors in passive S&P funds. Okay. And then he continued to say, or whoever this guy is, Ben Inker, he said, if the huge burst of demand ahead of inclusion disappears, Tesla's shares could fall dramatically after they join in the game. And
so basically, people that have been buying are going to dump on the people that are in passive funds buying like that S&P 500 index funds.
Yeah, like essentially the what I gathered, and something I also agree with, is the losers in this case are going to be the S&P fund holders, index fund holders.
Yeah.
Obviously, Tesla isn't going to be making up the entire, it's not going to be a huge percentage, but still it's going to be enough to make a difference if Tesla can't hold up and keep the train running.
Yeah.
We could see a big sell-off in Tesla after inclusion, and that's just something to consider. And if traders and investors start to think about valuation again with this one, and then not only that,
No, they never will. It'll just keep
Tesla
going.
just did an at the market offering, a $5 billion offering. Basically, again, this is their second one
Second or third time they've done
in
it this
few
year.
months.
Which is smart for them to do
It
at
is.
all-time highs,
It
right?
is.
Yes.
Which basically, for anybody that doesn't know what that means, maybe
Yeah.
explain that. So
Basically, they're raising money, but I'll let you explain that
Yeah,
in your hedge fund way.
No, that's exactly right. I mean, and at the market just is an offering where they have the ability to sell up to the amount that they've defined, the $5 billion in this case, at prevailing market prices. And sometimes there's a time frame set on that. So typically it can be a year or 2 years. In this case, I'm sure they can get it done in like 10 minutes because of the volume in the stock. So they'll sell they'll sell $5 billion this week in that at the market offering, and they'll sell it to whoever's buying out there. So
Yeah.
how crazy is it that they went from like, what was it, 2 years ago, having a liquidity crisis where they were almost bankrupt, barely able, and then their stock went up, and then it was like the reflexive trade where they were able
Yeah.
to raise, and then that alone kind of brought them out of the spiral of
The
death.
shareholders saved Tesla,
Yeah.
basically,
Yeah.
by driving up the stock price.
yeah,
And now Elon's printing money, basically.
through his stock.
He's got
Yeah.
his own money printer through his stock.
Tesla
wild.
printer go. brrr.
It's just fascinating.
Thank you, Daddy Fed and Daddy Elon.
It's fascinating
Oh, man.
to me.
Tesla, baby.
Yeah.
Yeah.
But yeah, it's going to be interesting to see what the stock does after the S&P inclusion. If it's a sell the news event or
Yeah. And I think, so we've talked about this a little bit too, about like the debate between passive and active investing. And I saw some really compelling arguments against passive investing for one of these reasons, which is like, if you're being quote unquote lazy with your capital and doing what the popular narrative is of just buying low fee index funds, you're essentially just giving capital to companies that don't need it. And it's like socialism in a way, where if you are an active investor and you're allocating your capital to where you think it's best served and
Yeah.
going to make you the most money, that's almost like more ethical or more moral in a way. And I never used to think that, but I'm coming around to that argument. What do you guys think?
Yeah, I mean, I think that active management is going to start to become more popular again. Or, you got to think about it. If you're just investing in an S&P 500 index fund and you're not getting an allocation to small caps or mid caps or, certain international stocks or whatever, there are a lot of stocks that aren't in the S&P index that have been great companies to own. So, I don't know. I think active management could kind of come back as becoming more popular, or people might start to do a mix of it. Like you can have your passive fund, but also maybe you want to over allocate to a certain stock in the index and you buy the individual stock. And there are ways that you can do it.
There's a middle path.
Yeah.
Yeah. What do you think, Trav?
Oh yeah, I mean the passive investing movement has been great in many ways. ETFs are a great product, but taken to the extreme, they create some incredible distortions.
Yeah.
And it's actually great for someone like me who's an active investor. I mean, I just look at some of the stocks that got kicked out of the indexes this year that have been some of my best performers. And they were stocks that were, down for whatever fundamental reasons in the short term. But then that sell-off was exacerbated by the indexes kicking them out and all the funds selling them. Then the algos see that, the momentum-driven algos see that, so they start selling or shorting. And that's how you get, Nordstrom at $12 with 40% short interest.
Yeah. Yeah.
And I'm like, thank you.
Yeah.
Yeah.
Thank you.
It's gonna create an opportunity, I think,
Yeah.
for the active investor to kind of come back in and be able to find those outsized returns.
Yeah. I love it. I just think that goes with kind of being like self-sovereign in a way too. It's like, don't just be lazy and allocate. And I say this like kind of hypocritically because we do own passive index funds. And I'm not telling people passive investing is bad, but maybe you shouldn't have, be mindful, like take control. Just like everybody here that's watching that owns Bitcoin and you self-custody that. like think of your stock investments and your private investments and real estate the same way. Like it's your investments. It's your responsibility. Take ownership over it. I don't know.
And I'm actually doing a class for the Skill Incubator community tomorrow on passive investing, and I'm going to touch on that, like how you can not be the one bag holding Tesla in just the S&P 500 index fund if this does happen, and find ways you can diversify with other funds.
Yeah.
And really just mindful passive investing.
That's a great point, because you can do passive investing without being invested in just the like major
500
S&P 500
exactly,
or whatever NASDAQ 100 ETFs. You can choose other ETFs, and it takes 10 minutes to figure out what the ETFs you're holding are actually holding with the underlying stocks and in what percentage.
Or do things like, instead of doing just the S&P 500, do ITOT, which ITOT has over it's got small cap, it's got mid and large, like it's got a little bit of everything, so you diversify a little bit more, and it takes away some of the risks, and little things like that you can do to be more conscious about your passive investing.
Love it. Love it.
Choices between equal weight and market cap weight too. When these passive funds get overly invested in just the top 4 or 5 companies, maybe you look at some equal weight type of ETFs.
Yeah.
And maybe Tesla goes to $1 trillion or $2 market cap in a year, and passive investors make boatloads of money. I don't know. We'll see. But I don't know. I like to manage my risk and be mindful of that.
Awesome. Well, I know we've got a couple of news articles we want to cover, but I want to tell you guys that are watching live, if you have any questions, feel free to throw them in the chat, and we will get to some Q&A here in a minute. One thing that I thought was interesting was the NASDAQ basically trying to impose diversity rules. And I know this is another kind of hot topic, controversial topic. What do you guys think of the NASDAQ, or, either the government or a private company telling other companies who they have to have on their boards or in leadership roles?
I don't like it. I'll tell you why I don't like it. Not because I think actually diversity typically is a good thing on boards, but I don't like this happening by, government decree or exchange decree, because the shareholders are going to push back. They're going to push for this anyway. So like, it's not necessary. It's not necessary to create arbitrary rules around this when you already have shareholders and ESG funds in particular already pushing on companies to have more diverse boards. It's already happening. You don't need to have some rule that mandates X, whatever. That's my opinion. I guess I can kind of see the argument in that there will be a lot of companies that still push back on shareholders and try to not have diversity on their board. So maybe I need to rethink that. But my first gut reaction is like, I don't think you need this.
Yeah. And I mean, I think we all agree, like, equality and diversity is good, and we should push for that. But to have a company like NASDAQ require your company to have a certain racial or gender mix, like, it just doesn't make sense to me. Like who are they to impose their will on that private or public company? It's weird.
I mean, I will say that, like, investors, millennial investors specifically, really, really care about this topic. And they care so much that even if a company is really profitable, they will not invest in the shares if they don't think that company's doing the right thing. So I agree with you guys. I don't think it should be forced. I think the market functions on its own and weeds that out, and companies, you can tell the companies that are trying to be ESG aware and function to where they fit in that criteria, they're very vocal about it because they know that millennial investors care about that stuff. So I think it would happen on its own. I think that we want to make sure people that are on the board are qualified to be on the board. That's the thing.
Yes.
It's just like anything. You want to make sure that whoever you're hiring, they are qualified to do that job. And this could cause, I guess, some issues, but I do think that it's great to bring that to the forefront. More women, more people of color on boards. I mean, we need that diversity for sure. But I think forcing it, the NASDAQ forcing it, just feels weird.
Why not just make the stats public and then let investors decide and say, like, oh, you only have a bunch of rich old white dudes and you make really shitty decisions for the environment and future generations, we're not going to allocate capital to you. We're not going to invest in your stock. Why not let it go that direction instead of some other people in a boardroom telling other people in a boardroom what they can and can't do? It's fucking weird. Man.
Agreed. Yeah, agreed.
Anyway, okay.
I think we're moving in the right direction, though. I think companies are aware of a lot of different things, a lot of social issues and just environmental issues, and I think that it's a good thing. It's a net positive.
Definitely, yeah.
100%. All right, cool. Let's get to some Q&A. Thanks for submitting questions, guys. We'll go ahead and jump over to the live chat. We got Sasha that said, if you have limited funds to allocate in 2021, where would you see bigger potential, stocks or crypto? Ooh.
Well, I mean, you go ahead and I know I know what I'm kind of thinking about that.
I mean, so here's what I know we can do, right? We can come up with models for pricing Bitcoin into the future and coming up with, annualized returns and thinking about that. And then we can also use portfolio theory to come up with a mix of stocks and crypto. So, and again, this isn't personal financial advice. I don't know your situation, so don't buy or sell anything based on what I'm saying. But I think it makes sense to have a mix of both.
Yeah, that's what I was going to say. I was going to say, why not have a mix of both? That's the goal, is to basically diversify a bit so that you can control the risk while still having the reward.
Yeah.
Right? So.
Yeah, I mean, and I think it's so dangerous and misguided for the people that are in the Bitcoin or the crypto community that say, I don't want to be in stocks at all. I think they're missing the boat in a way. Just like I think the people that still call Bitcoin a scam or saying it has no value, they're also missing the boat. The truth, in life with most things, the truth is usually somewhere in the middle, right? And if you want to be a successful investor, you have to remove your emotion and your bias and just focus on risk management, right? And I think you can do that with a mix. I don't know. I know Trav has 110% of his liquid net worth in Dogecoin, so I don't know.
Yes, parabolic Trav.
Oh, man. Yeah, I think if forced to make a prediction, I think stocks are going to have a little bit harder of a time by the end of 2021 than they did this year. I know both asset classes, both crypto and stocks, have pretty strong momentum behind them right now. But I feel like 2021, at least maybe in the back half, is going to get a lot tougher for stocks in general. I could be totally wrong on that. I think there's been a lot of low-hanging fruit that got picked this year and probably early next year too. So I think at least U.S. stocks, North American stocks, could be a little bit challenged for gains late next year, unless of course we're in just like a full-on, balls to the wall 99 style bubble, which is also possible. I think crypto's still kind of emerging out of its dark winter, so I could see crypto outperforming stocks at least on the back half of next year. But
I think that's for sure probably going to happen.
Yeah.
But that doesn't mean just because crypto may outperform stocks, I wouldn't say that means don't put anything in stocks.
Oh yeah, that doesn't change my. I'm still like, I mean, this is coming from a guy who's 90% in stocks.
No,
and I will remain that way because that's my core competency. But I still even myself, I still have a combo of crypto and stocks.
Yeah,
I agree with you though. I think that crypto could outperform stocks.
Yeah, If I had to be forced to make a prediction, I would say next year, or at least until the next halving, 2024. I predict that the annualized gains, the average gains, are going to be higher in Bitcoin than the stock market.
Yeah.
We'll see.
Oh, yeah.
The great thing about the skill incubator community is you get both.
Yeah.
Shameless plug.
Hey.
But stocks and crypto, both, I think, very, very interesting asset classes.
Yep. Christian asks, for Nikki, Bitcoin broke the 10-period moving average. So the next support could be challenged right now is the 50-period moving average, which is now sitting at 16,000. Bearish divergence, looking at MACD and RSI. Can you see the bear trend, or can you see a bear trend? So I guess just jumping over, we can do some kind of like short term.
So can I see a bear trend?
Yeah.
Assuming that no, not right now.
Yeah.
Look, for the trend to actually shift, I'll pass this back to you.
Well, I want to hear your opinion first.
Okay. So, like, even if we see a pullback to 10,000, I would say the trend is still intact overall.
Yeah.
Right?
I
Would you agree?
100%. Yep.
So I think people get pretty caught up in like pullbacks and corrections, but you have to really look at the bigger picture here. And yeah, I mean, I think Bitcoin could easily pull back to 13, I don't know, call it 12 to 10,000, and still we'll still be in a bull trend.
Yeah. Yeah, like I completely agree. And talking about moving averages, like just for anybody that doesn't know, I use the 100 and the 200 period, just simple moving average, just as a gauge. And kind of the main things that I look at are basically is price above or below, and then what's the angle to them, and is the 100 period closer than the 200. And then I look at, pivot highs and lows. So right now, since March, really, Bitcoin's been making higher pivot highs and higher pivot lows. And so I think a 10 period and a 50 period are probably too short term for me. Again,
same.
Everybody use whatever works for you. But yeah, for me, looking at the bigger trends on the daily chart, I like to use the 100 and the 200. And then, yeah, I mean, technically, we could pull back as deep as 10 to 12K and still be in a bull market. So
I'm glad we agree.
Yeah. Found it. Yeah, I mean, I would actually be excited if we got a fast dip.
Oh, yeah,
that deep. I don't know if we'll get it, but that'd be about a 35% dip. And again, on the last all-time high breakout of 1,000, we had 2 of these sized moves. So
it's not that crazy for Bitcoin to pull back there.
No,
I don't think.
I think it's actually probable. I think that's probably the more likely scenario, is that we get a pullback like that. Obviously, we could wake up tomorrow and be above 20K, but I think the odds are that we're going to consolidate and either get a deeper pullback or just kind of flatline in between, 16 and 20K for 2 or 3 months.
Yep.
That's my opinion. So, Trav, what do you think, man? YOLO Bitcoin calls?
Yeah, I mean, I think y'all are the experts. I trust your opinions here. And again, I mean, I think one of the bigger trends, I think fundamentally, is the influx of institutional money, which has really only just begun.
Yeah.
So.
Yeah, 100%.
Ralph asked a good question.
What's the question?
How long do you stick to an idea if you find an undervalued one, in your opinion, and the market ignores it? Do you buy if the price decreases and make the position bigger?
So that's the existential dilemma, right? Between value traps and...
Yeah, I mean, that's kind of what we were talking about earlier with Dropbox. Well,
good thing stonks only go up, so... Trav, I think you've got to...
It's situational. For me, so it depends. It depends on a couple of things. One, it depends on the health and the balance sheet of the company in particular. I'm speaking on the stock side, obviously, here. If you have a company that has a leveraged balance sheet, then averaging down can be dangerous. I've seen people lose significant amounts of their capital by averaging down into value traps or companies that ended up in bankruptcy, that ended up as zeros. Because
do you have any examples, by the way, that we can pull up that are still trading?
That are still trading?
My old Iconics.
Yeah.
I mean, I didn't ever.
Is that still listed?
Down, but yeah, it's still listed.
Oh, yeah. Wow. Yeah, here we go.
Yeah, that's a value trap. Value trap.
Yeah, had pretty heavy leverage on the balance sheet.
If I was averaging down on that, that wouldn't have been good.
Yeah.
Yeah.
Yeah, so you have to be careful about averaging down in situations like that where there's just a lot of operational and financial leverage, where small changes in the underlying fundamentals can actually end up, even if the stock's already down 50-60%, the stock can go down another 100% from that level. So you have to be careful. However, when you have a really interesting fundamental situation where there's not existential risk at the company, it's a relatively modest size, the fundamentals may actually be improving, or maybe there's a catalyst on the horizon, that's when I tend to actually make the position bigger. And I love doing that. I love the situations where I can start out with a 2 or 3% position and the risk reward gets better and better and better. There's not existential risk, and I can make that a 10 or 15% position, then my dollar potential profit goes up massively.
Yeah.
And I will absolutely average down.
So it's there's a difference between buying a stock or a crypto or any asset that is basically just having a death spiral. And so it can look like it's a good value, but really it's just dying. We've seen that happen in the crypto space. Like I say, like 99% of cryptos are going to zero eventually. Invest accordingly, right? Yet some people will still use the shotgun approach and just throw money at projects that they didn't even do any due diligence on. And then with stocks, it's a similar thing, right? It looks like it's a good deal, and you have to really walk that fine line between, is this a value and is it going to rebound and survive, or is it going to go into a death spiral? Right?
Great point. Yep. Stocks don't necessarily get cheaper as the price goes down. That's a really unintuitive thing that took me a while to learn too.
Ooh, that's a good one.
Yeah, because
Like what? How does that make sense?
if the fundamentals of the company are deteriorating as fast or faster than the stock price,
And earnings are declining.
yeah, earnings are declining. And sometimes you can't actually even see it completely yet, where you'll have a slight decline or the business starts to decline and the stock goes down 20-30%, and you're like, oh, now it's just gotten cheaper. Well, if you assess the situation and you realize if this trend continues in the deterioration of results, especially if you have financial leverage, and this, the stock could actually be as expensive or more expensive at that point, assuming the future continues to look worse than before for that company. So
Yeah.
a really unintuitive result. But yeah, like this is the case in a lot of like really leveraged situations, companies that are in markets where they don't control their own prices, like in the energy sector or in shipping, things like that. When things go wrong, those stocks can be down another 90+% even after they've been down 50%. It's really counterintuitive to a lot of people.
Great. Anything to add to that, Nick? Or
No,
nailed it.
good coverage.
Yeah. Let's see.
Like you didn't want to average down on Lehman Brothers in 2008, right? You didn't want to
Yeah.
average down on Enron, Blockbuster, right?
Yeah. Sears, JCPenney.
Sears, JCPenney, all those stocks looked cheap on trailing earnings that they had produced in years prior, but looking forward, as earnings were rapidly declining and there was leverage on the balance sheet, those stocks were actually not cheap. They were traps.
Nice. Vicinity asks, is seeing every purchase, like buying stuff, as 10 times as expensive compared to buying Bitcoin right now, is that a healthy mindset? So basically, like, it's kind of like the Bitcoin pizza argument, I think, is what you're asking, is like, do you really want to buy stuff with Bitcoin or like hold it as a speculative investment? Is that a good mindset? Like temporary frugality, only to buy bare essentials until the next bubble peak. So again, there's a lot of like personal, situational stuff that we would have to know to answer that. And we don't do personal financial advice, but I would say in general, that's just the concept of delayed gratification and just trying to maximize your cash flow that you can invest into stuff, be it Bitcoin, stocks, metals, real estate, private, whatever. I think that's a great mindset to have. But then there's a balance between sacrificing today for the future. So like, I think I tweeted yesterday, said something like, and I kind of stole this from you, Nikki.
Yeah, I noticed that.
Basically, you can't budget your way to getting rich, right? You can only spend so little. And what's a dollar? If you could have $100 in the future or $1 today, right? Like that's the question that you should always have. And I think there's a balance there. Right. The way I look at it is like, is a purchase today, would I prefer to have that thing today? Or would I prefer, I don't do 100 times future value. I do kind of like a 4x multiple 20 years from now, right? Like if you compound at 5 or 10%, basically you're going to quadruple that in a decade or two ish. Right. So I think like, okay, would I rather have, like with our boat, would I rather have $100,000, or would I rather have the boat and exchange $100,000 for that boat, or have $400,000 in the future, right? And then we look at happy points, like how many happy points do we have on a boat? So I don't know. It depends on the person's situation, but that's how I think about it. Do you guys have a framework for how you think about those things?
So like opportunity cost.
Opportunity cost, and especially I guess with Bitcoin, a lot of people have fear of spending
it?
out. FOSO.
Wait, say it again.
Fear of spending and then not having the future value of that.
Well, why do you have to spend the Bitcoin? why can't?
That's a good question. I mean,
if you're
yeah, some people only own Bitcoin, I guess, and then you still
well,
gotta
then in
live.
that case, then that you're talking about a currency that is also a store of value and an asset. It's like it's an interesting asset because it can do many things, right?
Yeah.
You know, when we think about our cash, our dollars, or our fiat, it's like we're not. Yeah, we have inflation to consider, obviously, but with Bitcoin, it is a unique asset that I would be thinking, well, if I'm bullish on the value of Bitcoin, I'd be wanting to hold on to it.
Yeah. I guess maybe a healthy way to think of it is like capital buckets. Like you have your cold storage, never going to sell. You have your trading capital, you have your investment capital, and then you have like your spending capital. So like I don't keep a lot of Bitcoin on my mobile wallet, but like if I need to buy something with Bitcoin, I have enough on there I can send $100 or something. Maybe you can think of it that way. Again, middle path, right?
Yeah, it's so situational because, if you read about like the effects of wealth, you know, on utility and things like that, like the curve flattens out. You know, as you get to a certain level of wealth, like a little bit of more capital provides less and less happiness, right? So you know, if you're making $50K a year, but your Bitcoin holdings have become significant, and they could selling part of that could change your entire lifestyle, allow you to get your kids into a better school or live in a better neighborhood, right? That's a totally different assessment than if you have 10 million and your your extra Bitcoin is like, maybe it buys you a second or third
fun
home,
money,
but it's just like, so it's so hard to answer that question without knowing the underlying situation. But,
That's a really good point.
Yeah. I do feel bad for the dude that spent the 10,000 Bitcoins or whatever it was on 2 pizzas. I mean, there are a lot of people that probably have extreme anxiety because they spent too much or panic sold early. Like I wasn't in that early, but I can imagine the man, I don't know, the regret.
I mean, if you think about it, like returns on assets are not, it's not normal to see the types of returns as quickly as people saw with crypto.
Yeah.
So no wonder people were selling at $1,000 a coin, like it went from $0 to $1,000 and, it's the returns are just so high and volatile at that. But in the stock market, we're used to 10% annualized a year for the past 100 years. And like Bitcoin, I don't know, what are the annualized returns in Bitcoin?
A lot.
Right? Like it's
a lot. Yeah, and it's almost like
beast.
It's a self-fulfilling prophecy in a way, because once the stock to flow ratio model became well known, people are buying just based on that belief, right? So there is risk in Bitcoin. You got to know that. Like I see some of these guys being public saying all their wealth is in Bitcoin, and I'm like, good for you. I don't have cojones like that. Like I want to be more diversified. Like I have conviction and I have a large percentage in Bitcoin, but I'm not going all in. I want other stuff too. Yeah. And if my returns 20 years from now are lower because of that, I'm okay with that.
Yeah,
absolutely. You're always going to look back in hindsight at certain assets, whether it's stocks, crypto, whatever, and you can see a way that you could have acted that would have maximized your returns more than what you got almost always. So you just have to remember that. That's part of that psychological game of investing.
It's the woulda, coulda, shoulda fallacy. Maybe that would be a good tattoo. Woulda, coulda, shoulda. There's always an opportunity to second guess yourself.
Have you seen the shirt that's got a Bitcoin coin and it says "should have listened to me"? Have you seen that?
I haven't seen that one.
I'm gonna get those made too on my store.
Shouldn't have been a hater.
Should have listened to
And then
me.
you got people like Peter Schiff that just double down on the insanity. Like, oh
At
God.
that point, it's just like, okay.
Yeah.
Yeah.
You really are
I don't think
crazy.
they're being objective about it at that
No,
point. It's like,
no, not at all.
Are you not at least asking the questions, why does everyone else think this is more and more valuable?
Yeah.
Like,
Right.
ask yourself that question, or you're just not being genuine.
Yeah.
Yep. All right. Next question. Let's see. Tiago asks, Chris, since Bitcoin's your biggest bet in crypto, I'd like to know some altcoins you're looking into for this next cycle. Thanks, and keep it up, guys. Yeah, thanks, Tiago. So I'll just tell you, like, my holdings right now are like 80 something, like of my crypto portfolio, it's like 80 something percent Bitcoin, like 15-ish percent Ethereum, and then maybe 5 or 10% everything else. Again, I operate with the assumption that most crypto projects are shitcoins. But I don't just dismiss the entire space and say, oh, everything that's not Bitcoin is a scam. I'm not in that camp. I think competition's good. I'm excited about whatever projects in DeFi are going to survive. But I'm not an idiot. I do understand the risks, and I do understand there's a conflict of interest, and, there's people that are running scams. But
I think you mentioned last week you still had some very small runners on like Tezos and Link, which were big trades earlier in the year. And then was there, and the DeFi stuff you mentioned, like those are some areas that you're kind of poking around on.
Yeah, I had a little loss on Kyber Network. So I like exchanges. That was one that was developing a trend and then topped out at $2 and then reversed. So I took a graceful exit on it. So I like to probe positions, and then when we have a meaty trade or a setup like Link, buying Link at $5, trading that up, I'll go heavy on trades on altcoins, but I'm not allocating capital like you do, on a fundamental basis where I'm like, yeah, man, I think this project's going to go to $1,000 in 2 years. It's just too high risk in the altcoin space. And again, I operate with the assumption that most of them are going to zero eventually, but that doesn't mean we can't have big bull cycles somewhere in there where we can make a lot of money that I can funnel back into Bitcoin or other investments.
Know your market environment.
Yeah.
And learn how to make it work for you.
Absolutely. All right, guys, we'll do a couple more questions and then wrap it up. I think we've been going about an hour and a half.
My stomach's growling. I need lunch. You can probably hear it through the mic.
Cool. Do you guys see any other questions you want to pull out?
I see one here. Oh, go ahead. Go ahead.
Samuel was asking or mentioning Microsoft. We were talking a little bit ago about some stocks that will go sideways for a while. And he mentioned Microsoft was lagging for years and years, like almost a decade, and then it took off. What's your take on that? It's a great example because I actually use this as one of the examples in my stock boot camp, which is a 35, 40-hour course that we offer we've offered it to members of our community once in the past, and we'll be doing it again in 2021. But the Microsoft example is so interesting because it is one of those that just really didn't go anywhere for a decade and then went on a monster bull run. So Microsoft had a couple of things happen during that decade where it was pretty flat. One, it was coming off the early 2000s bubble at which it traded at a crazy high valuation multiple. There were also some things that happened in the business. They had the big antitrust case, and so they had to take a step back with some of the aggressive things that they were doing with, their product suite and bundling their products. Microsoft kind of lost its way in terms of its product leadership, and they saw some things like Internet Explorer losing massive market share to Google's Chrome and things like that. However, during that decade, Microsoft actually did grow its revenues and its underlying profits, and the valuation multiple contracted. So you did have a situation there, exactly like what I was explaining before, where even though the fundamentals weren't like massive growth, they were actually steadily improving still, and the valuation multiple was getting better. So the risk reward was getting better through this decade. And all it really took for it to take off was some slight acceleration in some of the products that they were doing. Like they did a big shift from Office 6 to Office 65. If you recall, if you wanted to buy Word and Excel and PowerPoint,
you had to buy it one time.
That's
fee,
right.
And they went subscription model.
Yep. So they went from selling Word and Excel and PowerPoint, basically the Office suite, as like something you bought every couple of years and either got it in a disc form or in a download. They went to just offering it online, and you pay $10 or $15 a month for it per user.
Yeah. And I feel like a lot of businesses went that direction, right?
Yep.
What do you call it? Like the hyper subscriptionization of like the Netflix model, and even like Adobe with their Creative Cloud did that.
Oh my gosh.
So that was the primary driver here, or was it a bunch of stuff too?
There was a number of things, but that was one of the big drivers. And that really transformed the business from what was actually already a pretty good business to an even better business from a margin standpoint and a predictability. And that allowed investors to give it a much higher multiple. So now what you have is not only have you had business growth accelerate, but you've also had a valuation multiple expansion. So what was happening in the prior decade has now reversed.
Yeah.
You've had acceleration of the underlying results and an increase in the valuation multiple, which has led to this massive gain. So it's kind of a rare situation to get both of those things, but that's what creates massive 10x types of opportunities with companies like this, where you get the double tailwind, I call it, of improving fundamentals and improving valuation multiple. So Microsoft is actually like a perfect case study, and there's some others, but you could have invested through here and you would have been very frustrated at times. And, to that I say, if you're doing the work and continuing to keep up with the fundamentals and the story behind the company, you stay invested, maybe you slightly increase your position, and then, you just have to wait, unfortunately.
Yeah.
And hopefully it's not, if you're managing your portfolio correctly, it's not like 100% of your portfolio. You've got a number of different positions. Like in my portfolio this year, and probably yours too, we've had a number of really, really nice wins that we've talked about: Square, Stitch Fix, Nordstrom, Mac, Upwork, etc. Pinterest, yeah. But we've got some positions that have gone nowhere, and I'm okay with those sitting and doing nothing because they're just a part of the overall portfolio. I do think, Dropbox, my position in Portugal that I haven't talked about on here a lot, but it's one of my biggest positions. It's gone nowhere. What else has gone nowhere? Baidu really is just now starting to work. Those are positions that I've held for over a year that have not performed yet, but you just got to be patient sometimes with that.
It's a great lesson, man. That's worth its weight in gold right there.
Yeah.
Man, awesome. All right, next question, and then we'll start to wrap it up here. RJ was asking, what market sectors do you see as having the most value breaking into a new administration and post-vaccine economy? So basically by next summer.
Retail.
Travel. Restaurants?
Yeah, maybe.
What are like the biggest restaurant groups that might have a massive rip? It's like Cheesecake's one of the larger ones, right?
Cheesecake's an interesting one because they have a nice little part of the company that they acquired last year, Fox Restaurant Group, that has some fast-growing concepts. So the core traditional cheesecake restaurant concept is stable, good financials, but not really growing all that much.
Yeah.
And that wouldn't be all that sexy, but there is this part of the business that they acquired last year that has the potential to expand to several hundred restaurant locations. That would be Flower Child and the North concept within the business. And so that could be a potential growth driver that adds a couple of bucks of earnings to the company over the next 5 or 10 years. It's going to take a while to play out. But it's already recovered quite a bit from the bottom. So there is long-term growth. I think it could be a little bit of a slower grower over time.
Yeah.
From here. But
I guess administration changes too could be like cannabis, healthcare,
yeah,
those sectors.
I mean,
Yeah.
obviously the EV sector is getting a lot of play because the U.S. is going to put resources behind that. Likely.
Did you guys take profit on SBE yet?
Took some profit.
Yep.
Yeah, this is just an example of kind of this is for me. This is like 2020 in a bag.
Yeah.
Like EV, SPAC, momentum play. It's got all the ingredients of
You're
2020.
right. Yeah. And it looks like it's gonna go to retest all-time highs.
Yeah.
Like
had the
soon.
first pullback after the breakout, and
Yeah.
this thing's just, is it crazy overvalued right here or not so much? What do you think?
It depends on the time frame. It went a little too far too fast, in my opinion. This company still has a long way to go to execute on its business plans over the next decade. However, I think this can be a $50 to $60 stock in a couple of years.
It'll probably do that in a week.
Yeah, that's the thing, though, right?
At this rate.
You know, and the market likes to take stocks that have momentum far beyond fair
Yeah.
value right now. So I think I've kind of done some back of the envelope math, and I think this company's true value can be $50, $60 in a couple of years. But that's a couple of years from now. If it gets there in 2 weeks, I'm probably going to take some more profit. Like,
Yeah.
but yeah, I think
I'm worried about this one pulling like a TLRY. You remember that? Like
Sure.
the cannabis stocks that just went ham in the beginning.
Wait, was it TLRY?
TLRY.
Yeah,
Like they
Tilray.
just
Tilray, yeah.
Yeah, like a lot of the cannabis stocks, they did this. I have a feeling we're gonna see this story play out again, where the stocks go mad, they go crazy, they go parabolic, and then they level out and find some happy medium somewhere.
Yeah. So talking about Tilray and some of the marijuana stocks, like I know these were back in 2018, they had a big hype cycle.
Yep.
Recently, the bill got proposed or passed, I think, in the House for federal legalization.
Yep.
But I guess the Senate is likely to shoot it down.
Yep. Yeah, under the current control of the Republicans in the Senate, it's likely to get shot down or just not even voted on.
Yeah.
So we're still kind of in limbo there at the federal level for legalization. But, we've seen a lot of states actually deregulate marijuana in the U.S., and I think that's a trend that will continue.
Yeah. I've actually been waiting. I'm surprised it's taken this long for federal to get approved or passed.
Yeah.
But maybe not. I mean, it's all old people that don't get it. So
Yeah, sadly.
Yeah.
But when you look at like opinion polls across the U.S., it's very broadly in favor of marijuana legalization.
Yeah.
Broadly. So
if I were a governor of a state like Texas and I saw how successful it was for like Colorado and how much money it made, I'm like, you have to be an idiot to not want to implement that. Like
Yeah.
how much, I don't know how much revenue, but I remember it was a lot. Yeah.
Yeah. So, I mean, this is a sector actually that's a good candidate over the next few years to get some benefit from the current administration. But the hard part is, as we've talked about before, the stocks themselves may not all, be winners because it is very competitive. Margins have been relatively low. The ones that are just selling the commodity flour or commodity products may not actually get that great of a operating margin on it. So the question is, what should these things really be valued at? But, I think we could get another hype cycle in cannabis stocks. We kind of have already seen that a little bit the last few months in some of these that they've recovered. But there are businesses that are definitely better businesses in this industry. So it's worth being more selective, I think, in the cannabis sector.
I think that's a great point. Yeah. I mean, you can't use the shotgun approach here because a lot of these companies are going to fail. They're just going to get out competed, right?
Yeah.
But the ones that do win, there's a big pie to be had. But like, I mean, just talking about the price of marijuana, how it came down because there was so much supply that flooded the markets. Even like retailer, I don't know, man. It's a really risky space.
Yeah.
What, you're smiling?
No, Callie just said, now I know what you're talking about, because she, Callie.
Yeah.
She didn't know what we were talking about this whole like podcast, but now she knows because we're talking about marijuana.
Hey, there you go. We got some aficionados out there.
Got someone in the industry.
Yeah.
Sorry. Side note.
No, that's great.
Yeah, awesome. Well, so what other plans or I guess kind of things, since we're coming up on the end of the year, kind of wrapping up, thinking about 2021, what are you guys excited about? What are you looking forward to? Where do you see the opportunity?
I'm looking forward to traveling again.
Yes.
And maybe my retail stocks doing well.
Yeah.
I don't know.
Maybe that's a thing. Like when the vaccine's out there and, Airbnb lists, let's see, IPOs, sells off, bases, and then people start traveling like crazy and maybe we get a big rip in the Airbnb stock.
Hey, if we get that dip, I'll be all over it. I'm not sure we're going to get it.
Maybe people are all thinking the same thing we're thinking.
Or maybe, maybe the Sell the News event on Tesla creates a market waterfall selling event and we'll get a shot at it. I don't know.
We'll see.
Yeah.
I'll say, yeah, I think for 2021, obviously I'm on the personal side very excited about being able to do events for our community again, hopefully.
Oh, yes. We're going to have a dope event in 2021 if this all works out for us.
I hope so.
Yeah, it's going to be dope.
Kind of like Cayman or Amsterdam.
Yeah.
Like,
Yep.
Yeah, we've had some good times.
Absolutely.
We're going to party.
Yes.
Yeah. Yeah. Being able to party with people again, that'll be great. On the investing side, like I said, we're going to try to hunt in some places where not everyone is hunting because we that's where we tend to make the biggest gains. So we'll be looking at more international markets, probably be looking outside of like the hottest sectors to try to find some undiscovered gems and things like that. So maybe small caps, maybe industries that aren't tech and software and EVs.
Yes. And something I'm going to add too, I didn't mean to cut you off.
No.
Sorry. is looking at the high-flying stocks of 2020 earnings reports. I have a feeling we're going to see a lot of gap downs and could bring some opportunities.
There we go.
That is a great point. I have been thinking about potentially looking at some short opportunities or some opportunities to play the downside on stocks next year more. I've been mostly avoiding it this year, except for obviously I had some index hedges on, but have been mostly trying to avoid being too short because of
I think that's smart.
you gotta know
that's
the
smart.
market environment you're in.
Yeah.
But once we do start to see some breaks on some of these high flyers where maybe they're even still putting up good numbers, but the stocks are breaking down, then I think then you start to go a little bit heavier into trying to profit on the short side.
Yeah, stuff like Zoom, Peloton, maybe stuff that got, the COVID
Snowflake.
stocks. Yeah, Snowflake, yeah.
Or get an opportunity to buy dips too, if they go down far enough. To where
True,
it's like, okay,
true.
now, marketing, the exuberance that you see on both sides, the upside and the downside. So you have short opportunities, you have dip buy opportunities potentially on these high flyers that maybe they're still performing, but growth is starting to slow and normalize, and then the market's starting to value them for what they really are. So I think there's still going to be a busy year, 2021.
Yeah.
Sure.
I'll tell you one thing in the crypto world. Well, there's three things, maybe more, that I'm really excited about in crypto. Number one is if and when we break 20K on Bitcoin, that will likely lead to another bull cycle where we get to more actively trade Bitcoin. Because this year, it hasn't really been an active trading year for me. It's been more of just building into this cycle and accumulation play. I haven't been in and out of a whole bunch of stuff, just been building back size. But if we can break out into a true bull trend, dip buys, breakouts, altcoin season, stuff like that, I'm really excited about. The other thing is synthetic markets, which I don't know if this is 2021 or later, but just more trading options, more prediction markets, more development that comes out of decentralized exchanges, self-custody stuff, just the nerdy Bitcoin stuff and crypto stuff that I think is really sustainable long-term and where it's headed, right?
Yeah.
More control, more decentralization.
STOs.
That's the third thing, security tokens. So that's kind of in line, I guess, with synthetics, but it's just more, traditional markets that get tokenized that we get more access to. And I knew that was going to be a slow grower, 2 years ago when T0 and that type of stuff started to launch. But I was hoping by now there would be more activity. But that's another thing that hopefully in 2021 we'll get more options too.
Heck yeah. That's going to be a great thing for us to team up on is STOs because we'll have the fundamental, the technical, both the trading and the investing side in crypto assets.
As if we didn't have enough things to keep up with. Now I have to learn STOs.
Yeah, man. I love it. I mean, it's evolutionary. It's not revolutionary, right? It's it's the same asset. We know how to value it. It's just, we got to deal with the token, which actually makes life easier in a way. So yeah. Cool. All right. Well, guys, we can go ahead and wrap it up. One thing, so we actually gave out this promo code for the community last week, and I wanted to give it to you since we're coming up on the end of the year. If anybody has not joined the community, if you go to chrisdunn.com/community and just type half off, you can get half off your first membership tuition. So either monthly or quarterly for anybody that wants to join us. I know we have a lot of you guys that are already in the community, but for those of you that aren't, if you want to get started, this is how to do it. And we have a really good time in there, and it's been an amazing year. We have a great core base of people that have done really well this year. Yeah.
It's a family. I feel like it's a family.
And you're the mom of the family.
I'm the mother. Yeah, I'm for sure the mother. Keeping everyone in line. No.
Who am I? Am I the degenerate brother?
Yeah.
Uncle?
No, man. He's the genius cousin that everybody wants to pull into the family events and pull him to the side. Hey, Trav, what stock should I buy? Oh, man. Cool. Well, good stuff, man. I think so. Next week we're gonna do one more show, and then we're gonna take the second half of December off.
Yep.
And decompress after one hell of a wild year. And yeah, looking forward to things normalizing. Is that the right word? Normalizing next year?
Mm-hmm.
Yeah.
Let's hope that happens.
Yeah. Awesome. Well, guys, listen, thank you so much for being with us today. Go to wetalkmoney.com, submit a question for the show, subscribe to to the We Talk Money show on a podcast. Just search We Talk Money. And
If you love it, leave a review, please.
Yeah.
And thank you.
And yeah, we'll see you guys in the Discord chat channel and the market update classes we do. And see you guys in 2021. Take care, guys.
Cheers.